Let me say something that most people don't want to hear. Funding is not difficult, but raising funds without preparation is almost impossible. Every day, I see businesses chasing investors, pitch decks flying, emails being sent, meetings happening, but deals not closing. And the reason is simple. They are trying to raise capital without being ready for capital. Hi, this is Raj Sukheja, your deal and business architect. Over the years, I have worked on multiple transactions across debt, equity, structured finance, and cross-border deals. And if there is one pattern I have seen consistently, it is this. The success of a fund is decided before you meet the investor. Not during the meeting, not after the meeting, but before you even reach the table. And that is where preparation becomes your biggest advantage. Most businesses think funding is about a pitch. It is not. A pitch is just a summary. Funding is about clarity. If you're not clear, no investor will be. If your story is weak, no investor will strengthen it. If your numbers don't make sense, no investor will believe them. You cannot outsource clarity. You cannot outsource conviction. And you definitely cannot fake preparation. Let me tell you something important. Investors don't say no because of lack of opportunity. They say no because of lack of confidence. Confidence in your understanding, your structure, and your execution. And confidence does not come from your words. It comes from your preparation. And when an investor asks a question, they are not just listening to your answer. They're measuring your depth. And depth comes only from preparation. Let's break this down into something practical. If you are serious about raising capital, you need to prepare across 6 levels. 1. Clarity of purpose. Why are you raising funds? Not a generic answer, a precise one. Working capital, expansion, acquisition, technology. Because each purpose requires a different strategy. And if you are unclear, your investor will walk away. 2. Financial readiness. Your numbers must speak before you do. Your past performance, your projections, your cash flows, your margins. If your numbers are not aligned, your story collapses. Investors invest in numbers, not narratives. 3. Structuring the deal. Debt, equity, hybrid, trade finance. Each structure has consequences on your cash flow, on your ownership, on your future. And this is where most businesses make costly mistakes because they choose funding without understanding the structure. Investor alignment. Not all money is good money. Let me repeat that. Not all money is good money. The right investor brings value. The wrong investor brings pressure. Alignment is not about who gives you money. It is about who stays aligned with your vision. Compliance and documentation. This is where deals break silently. Legal documentation, regulatory approvals, cross-border compliance, due diligence, readiness. One missing document can delay a deal by months. One wrong clause can impact you for years. Negotiation readiness. This is where value is either created or lost. Valuation, dilution, control, exit terms. If you are not prepared, you will negotiate from weakness. And weak negotiations lead to expensive capital. Let me share something from experience. 2 businesses approach investors. Both have potential, but one is prepared, the other one is not. The prepared one answers before being asked. The unprepared one reacts after being questioned. Guess who gets funded? Preparation does not just improve your chances, it transforms your positioning. Stop asking for capital and you start attracting capital. At Red Mammoth Ventures LLP, we don't just help you raise funds, we help you prepare for funds. We work on structuring, risk mitigation, investor alignment, cross-border transactions, trade finance and customized financial solutions, because funding is not a transaction, it is a strategic decision, and strategy only comes with preparation. If you are planning to raise capital, ask yourself one question. Are you prepared or are you just hopeful? Because in funding, hope is not a strategy, preparation is. If you are serious about raising capital the right way, connect with us. If this video gave you clarity, make sure you subscribe to the channel at So True Business. Because the way you think about business must evolve before your business does. Thank you. This is Raj Sukheja signing out.